Welcome to this week's live ASX strategy session. Thanks for joining me for another show and heaps of interesting things to go through this week with a record-breaking run in the US, vulnerability in the local market, plus some interesting movement in the commodities, which we'll go through a bit later as well. Then also any stock codes you have, get them ready. We're going to go through those in the second half of the show. As always, everything today, general commentary only, doesn't take your personal situation into account. Having been through all that, let's get into this week's first chart. And starting off with the ASX 200. So, is the ASX 200 at risk of a sell-off? Well, I'm going to explain a key vulnerability in a moment. And then over in the US, the S&P 500 is on the verge of its 10th up week in a row. I'm going to show you what happened the last time the market was up 10 weeks in a row, and I think you'll be surprised. But before we get to that, let's start with this latest price action in the ASX 200. Well, the ASX 200 continues to struggle to make headway below the moving averages. It's now been 6 weeks of consolidation below the moving averages. I've got the 50 and the 100-day moving averages on the chart. And despite several attempts, it's been unable to get itself back above the moving averages. Just look at the price action over the last week. So prices were on the verge of breaking through on Tuesday. And on Wednesday, prices got themselves above the moving averages briefly, but then from there, it's selling pressures come back in, push prices back down. Last week, we discussed the market's vulnerability below the moving averages. Now, an important point to make is that vulnerability doesn't mean prices will break down, but risk is higher while consolidations occur below these moving averages, while the consolidation below the moving averages persist. I think the inability to get back above the averages, I think it is a concern. I think it's something to be aware of. Buying hasn't been strong, and there's been this constant supply of shares every time prices have approached the averages. I don't think we should assume the worst. The selling pressure hasn't been strong enough to cause a breakdown. Every time prices have come back, they have been caught, and the market has pushed things back up. But unless prices start to break down below the May low, I think this still has the potential to be a basing period. But I think it really does all hinge on prices being able to retake the moving averages. We really need to see prices back above the moving averages, and that's been something which has been unable to happen over the last 6 weeks. And unless that happens, then an uptrend simply can't develop. Now, the dominant structure on this chart remains the trading range, and this being the trading range which has formed over pretty much the last eight months now. You can see where prices got to around August last year, and since then it's really just been either side of the moving averages. Now, ranges are essentially holding patterns, and they typically occur after we get a strong trending period. And like we had a strong trending period from the April lows last year, had several months of good money making trending conditions, and then following that we'll go through the what in this case is a sideways consolidation. Fairly typical type of pattern which is played out. There was now there's no way to know. There's no way to be certain which way a range is going to break. I'm maintaining, as we've been talking about over the last few weeks, probably few months, I've had a bullish bias throughout this period. But I think a lot depends on what comes from the last 6 weeks. So from this period below the moving averages, what comes from that? I think that's really important here. Momentum has really dropped off in either direction, and you can just see by the lack of movement in this most recent period. So the market is essentially at a standoff, and we're waiting for it to show its hand in either direction. Can we get that sustained push higher, or do we get the sustained push lower? It really is a case of waiting to see which way the market takes this. Going over to the equal weight next. So this is the ASX 200 on equal weight basis, and the structure here, the structure here is also has that same vulnerability, because it continues to trade below declining moving averages. And you can see the 100-day, you can see the 50-day, they're both continuing to move lower. Price is still below those moving averages. I think the next week or two could be critical. So prices have rallied towards the 50-day moving average. You can see from the low in May, we've had this rally up towards the 50-day moving average. The question is whether prices can now trade above the moving averages. Can we see a break through the moving averages and then through this resistance area above that? Or does selling come back in like it did in April around the moving averages? Does selling come back in towards the moving averages and we see prices push lower again? Just in the last few days, you can just see in the last few days, prices appear to be finding some resistance around the 50-day average. So this is something to monitor. Can prices stabilise here and push higher, or is it again going to be that case of selling from the averages? One of the things we've been discussing in recent weeks is the underperformance of the equal weight compared to the ASX 200. So the equal weight, it's currently about 12%. So there's the all-time high back in January. Equal weight's currently about 12% below that all-time high. Compared with the ASX 200, it's only about 7% below its all-time high. So you've really got that underperformance in the equal weight. And this has been a key reason why I've been saying that I think the ASX 200 could stay range-bound for possibly several more months. The strength in the local market, it's just simply not broad enough at the moment to I think, to take the entire market higher. We really need to see the equal weight start to show some more strength before I think we can see a sustained break from the ASX 200's range, at least to the upside. And this is why I think it's so important to watch how the equal weight responds around this 50-day moving average. What I don't want to see is a sell-off that takes prices down below the May low. We see prices start to come off and breaking the May low. That would be a sign of weakening participation and then increase the likelihood of a breakdown in the ASX 200. So that of course has not happened at this point, and it may not, but it's a case of being aware of risk, being aware of price action to watch out for. Just quickly coming back to the ASX 200, I think there's certainly risk to be aware of with this price action, this persistent price action below the moving averages. And there's a clear vulnerability to the structure with prices in this current position. But as I said, vulnerability doesn't have to end badly. I think the key here is that we can identify the risk and we can manage it. And we can manage it with stop losses, trailing stops on profitable trades, and waiting for the right setups before coming in to buy, not just buying stocks which are below their own moving averages or trending lower. And at the same time, maintaining profitable positions. So I think once we understand the risk, we can then manage that risk accordingly. One thing I find interesting is that the local news flow over the last, it could be over the last few months, but I think particularly over the last month, it's been fairly downbeat. But the ASX 200, it's been holding its ground despite that downbeat news flow. So I think that's somewhat positive that the market's holding up. Often when a market sells off on bad news, is what people expect. When a market can hold its ground on bad news, well, it could be a sign of some underlying strength. So don't let uncertainty scare you out of the market. It's not the bearish headlines that I think we need to worry about. It's bearish price action. And at the moment, I'm just not seeing that bearish price action. We have vulnerable price action, but it's not bearish. It hasn't broken down. The ASX 200 has not broken down at this point. Okay, so we're going to jump over to the US market. I've got all the small caps and the commodities after that. But first of all, if you're getting some value, please click that like button. Helps me heaps when you do that. Just that simple act of clicking the like button helps a lot, because YouTube sees people are watching and engaging and they like it, and YouTube shows other people, and it makes the whole free segment of the video work well. So please do that. Leave us your comment. Tell me what you think. Is it a breakdown? Is it a break up? Or is it more sideways? What do you think is happening in this local ASX market? All right, S&P 500. Well, the S&P 500 is on the verge of its 10th up week in a row. So if Friday, so of course we're recording this at a little bit after 1 p.m. on Friday afternoon in Sydney, so the US Friday session is yet to begin. If that Friday session is at all positive, then that will be enough to stretch the S&P 500's winning streak to 10 weeks in a row. Now, this wouldn't be the first time that had happened. The S&P 500 has had winning streaks of 10 or more weeks before, but it is an exceptionally rare event to get such a long winning streak. The last time the S&P 500 was up 10 weeks in a row, it was actually back in 1985. So that's over 40 years ago. So as I say, it's an exceedingly rare event. Prior to that, the only other winning streaks of 10 or more weeks were in 1963 and 1957. So just 3 in total. And if Friday's an up day, well, that would make 4. Now, it's interesting. I'm hearing a lot of talk about bubbles, about crashes. When I see the X feed, I see people overlaying charts of the GFC and the dot-com bubble and showing how the current price action could go in the same way. And of course, anything's possible. Anything is at all possible, and bad things can happen. But market strength isn't a reliable predictor that everything is about to turn on its head and then suddenly collapse. In fact, long winning streaks have a strong tendency to lead to higher levels in the months ahead. Now, of course, there's going to be pullbacks, and winning streaks don't continue endlessly. But the pullbacks after strong periods, there's more of a tendency for them to be mild, and to prices then to continue higher. Let me show you what happened after the last 10-week winning streak. It was back in 1985. I'm going to go to a weekly chart so we can transport back to 1985 quickly. So of course, it is a long way back on these charts, and here it is over here. Here's 1985. It was October, November, December 85. Market had been rising for several years, and then here we go. We've got it's actually a 12-week. It's actually a 12-week winning streak. Back in 85. And then after that 12-week winning streak, there was like about a 4 or 5 week pullback. And then prices continued upwards for quite a bit longer, until eventually there was the 87 stock market crash. But that's a separate event to the 12-week winning streak. The point is, the 12-week winning streak led to a mild pullback and then further ongoing strength for nearly another 2 years in that particular case. Now, of course, the current rally we're having, the current rally in the S&P 500, it's going to do its own thing. It's unlikely to follow this exact course of the 1985 example, and it mightn't even continue higher. No one can be sure how this is all going to play out. But if we just come back to current day, and come back to a daily chart, look, just coming back to where things are now, what I think is clear is that the path of least resistance is currently up. And betting against the trend, betting that something is working and betting against something where the money flow is coming in, it's often a losing bet. As it stands, the S&P 500 is trending upwards. The moving averages are both trending higher. The 50 and the 100-day moving averages are trending higher. And prices are not especially stretched above the moving averages at this time. And there's a series of what I'd call running consolidations along the way. You can see these little periods of brief pause and consolidation along the way before the market moves higher. And these are like they're brief, they're shallow pauses, only a few days. We spoke about the possibility of these a few weeks ago. A recent example was during last year's rally from the tariff sell-off. You can see we had got these same running consolidations where the market brief pause over days and then continues to push higher. And this is the type of price action that we often see. I think when people basically miss the initial move higher, then they're scrambling to get back in on the mildest of pullbacks. It's essentially a form of buying interest. That's what we've been. I think that's what we've been seeing over the last few weeks. Coming over to the equal weight, the S&P 500 on an equal weight basis, it's interesting to look at what is happening in the most recent period. Equal weight hit a new all-time high on Thursday, so that's a new all-time high for the equal weight, and I think that's a sign the rally is more than just a handful of stocks pulling the market higher. To get the equal weight rising, it generally takes more than just a few stocks moving upwards. And I like that the latest gains come after a period of sideways consolidation towards the moving. And I think the shallow consolidation, like look at the strong rally off the March low, and then you got this shallow sideways consolidation into the moving averages. When you get these shallow consolidations and then you get a rally off the moving averages, it's just another sign that the bulls might remain in control. One more thing I wanted to quickly show you on the US market, it's transports. So we don't usually look at the transport index or transport ETF. This is actually an ETF. So this is the iShares US transport ETF. And I think what's interesting with transports is that they can be a useful guide to a potential slowing in the economy, and that's because transports are so closely tied to economic activity. But look at the price action here. It's look at the price action here. The transport ETF hit a new all-time high just this week. Just on Thursday, it hit a new all-time high. So I think this is another example that the rally we're seeing in the US, it's more than just tech. And I think going by the strength we've been getting in transports, it appears to me the economy is still holding up well. Just quickly back on the S&P 500, people are naturally concerned and understandably after a big run. It's just natural to look at a big run and people think, look, it must be near an end. But I don't see anything here that indicates prices are about to reverse course and trend lower. Yes, they might pause and consolidate. Yes, they might pull back somewhat. I don't think they're coming all the way back to the 50-day moving average in the near term. They could certainly pause and pull back. But nothing here indicates, as I say, there's a reversal or a big trend change in the structure at this time. As it stands, this is a textbook uptrend. Prices are above rising moving averages. I think it's a case of continuing to do what's working, and that is staying long the US market. But as I said last week, don't be complacent. Managing risk is always essential, and that means having an exit strategy for when the trend does ultimately change. And we know ultimately it does change. And I think if we have a good exit strategy, it can help give us the confidence to stay on these trends for longer. And that's how we maximize gains, when we can stay on trends and not get scared out of them. Okay, we're going to move over to the small caps next. We've got the commodities. also look at any stock codes you'd like me to have a look at. We're going to go through all that in a moment. But of course, that wraps up the free section. If you're not a strategy session member, click the link in the description section and come on in. We're going to go through a whole lot of stuff. Doesn't cost you very much. And look, I think you'll get a whole lot of interesting ideas and value that you're not going to get elsewhere. Okay, so let's now jump over to the Russell, the US small caps.